Want to know what I think might be the biggest robotics play and AI play? Maybe not NVIDIA, maybe not SMCI, maybe not Tesla. I think it might be Amazon. If you stay tuned for the next few minutes, I'm going to show you how I build that thesis and how maybe you can make some money on it too. By the way, before I get started, I'm having an event in September called the Wealth Accelerator Live 2025, and it's going to be held in Clearwater Beach, Florida. If you're interested in coming to that with your peers and learning about how to make reliable income in the stock market and figure out how to read charts and all the other fun stuff, stay to the end. I've got a nice little promo at the end that tells you a little bit more about the event, and I'd love to see you there. But now back to the video. So I think Amazon could be ready to take off, and I'm going to show you why. First of all, I just was reading the Motley Fool this morning, and I thought this is a pretty good article to share with you. Prediction: this company will be the robotics leader, not Tesla. Certainly with the Tesla news lately, it's not going to be like they're going to be leading the charge, maybe, because they're having some headwinds right now with the CEO doing some funky stuff. But anyway, while Tesla has talked a big game about its Optimus robot, Amazon just deployed its 1 millionth robot at its fulfillment centers. Now, I don't know if you've seen those robots. They're really cool, right? They're humanoid, and they put batteries and stuff at the Tesla plant. They're going to be working at the Tesla plant. And unfortunately, you know, Elon Musk gets way over his skis when he makes predictions. And so I don't know if it's going to be coming out next year like he's predicted. He's basically said at the end of the year, an Optimus robot will be available for the employees. Well, okay, cool if you're an employee. And then next year, the Optimus robots will be available to the public. I don't know, it seems like pretty early to me. And while I want one to mow my lawn and clean my dishes and, you know, do the yard and clean the house and all that kind of stuff, I'm not sure they're going to be ready for prime time, even in the next year or so. But Amazon's already in the robotics game. They don't look like humans, but they got 1 million of them already. I don't know if you've ever seen the Amazon robots, but they pick up things, they put them on the shelves, they take them off shelves, they put them on conveyor belts, and this is all without human intervention. And so the next bullet point, the company's robots are using AI to help make the company's warehouse operations much more efficient. Now we're getting into robots being programmed by AI. Now Tesla's got a great AI case. They use all this X.com, you know, Twitter AI information, all the stuff that you and I post or whatever. And then they use that for, you know, Grok, which is their AI model. And they also have a huge AI database warehouse in all their self-driving stuff. So a case could be made that they're going to be the leader in AI. It's just not the way we think about AI, like ChatGPT and all those kinds of things. But amazingly, Amazon is kind of doing the same thing in their business. So I find that a compelling thing. And meanwhile, it's also using AI in areas like delivery and inventory management. So I don't know about you, but I use Amazon when I'm in the US, and I think it's a great company. They're a great company for a vendor. They're a great company for a retailer. They're a great company for a customer. They're great at logistics. You can return stuff. It's actually quite an operation. So I wouldn't bet against them when it comes to robotics and AI. And I'm going to build the rest of the thesis a little bit more technically here. But I also want to show you the other side of this. There's another article from Guru Focus that says Amazon insider offloads shares worth $500,000. And Doug Harrington is their senior VP. He offloaded 2,500 shares. I don't think that's a big deal. And he also did it in a 10b5-1 plan, which basically says, hey, I'm going to be offloading 2,500 shares a month or whatever the number is for the next 10 months, you know, because he wants to pay for a boat or whatever they do when they get really rich over there at Amazon. And all that's great, but to me, 2,500 shares is not shaking the earth, and it's not telling us to run for the hills because all the insiders know something and they're selling. But nonetheless, I figured you want to know that. Now, let's talk about the thesis that I have about Amazon. So I'm showing you a chart, and on the right side of the chart is the technical side. I'm not going to spend a lot of time on this chart, but on the left side is the fundamental side. Now, the fundamental side, you can see they lost money in 2022. 2023, they made 290, then it went to 553, then 620, and 727. So real nice double-digit growth on average over here. Additionally, if you go to the bottom here, you see earnings per share. Quarter over quarter growth has gone from triple digits to basically double in single digits over here. Still not bad. It's Amazon. It's a huge company, so it's not growing percentage-wise as fast. Same thing with sales. Double and single digit sales growth. I don't like that it's growing less generally, but I do like the chart on Amazon, and I'm going to show you that in just a second. So if you look at this chart and you go back to like October of 2023, somewhere in there, you see this little breakout spot. That's why I put this line there. And from there, it never looked back. It just went straight up, had a little bit of a pullback here, and then it went all the way to like 250 from about 150 bucks. Pretty nice run. And then it had this big correction over the last several months, and now it's coming back up. And I think it looks really ripe for an upside gain, okay? And I'll show you why. So let's take that other chart, and now I've kind of zoomed in. Here's the spot in October, November of 2023 where it kind of broke out. And you could see it just kept going up and kept consolidating, and then up and a consolidation and up and a consolidation. And now it's in a cup with handle. It looks like a little teacup here, right? With a handle. The top of the handle is where the stock is the breakout point. That's the pivot point. And that's right where it is right around now. And so it's in that little breakout zone where I like to buy stocks, because you've got a higher probability of making money if you can buy them in a proper breakout zone, because breakouts succeed about 60% of the time. That means they fail about 40% of the time, but I like to buy it at that right spot on the chart because I like to have that chance of success on my side. Even if it's only 10%, it's actually a 20% delta between 60 and 40. So I see a nice little percentage tailwind there. We're also in a green market. I like to buy when stocks are going up. Maybe not today, maybe not tomorrow. It's things might be pulling back, but overall we're in a green market. I don't know when that ends. I can just tell you we're green. Green means you got a tailwind, and 70% of all stocks perform according to the direction of the market. Right now we have a tailwind, so we got to take advantage of that. So you've got the right stock in the right market at the right spot on the chart, right here where it is in the breakout zone. So to me, I like that. So I have 4 cornerstones: right stock, right market, right spot on the chart, and then I like to squeeze the juice. And I'm going to explain that in just a second. I do that by selling call options. So now we've made the thesis of why we're liking Amazon so much, fundamentally and technically. Now, let's look at the options. Those of you that are new, an option is simply just a right, but not the obligation, to do something before a certain date. So if you're the buyer, you have the right to make somebody that the seller is do something before a certain date, okay? If a seller sells somebody an option at a certain strike price, like if we sell a 220 call strike price for Amazon, we have to give that Amazon up. We have to sell it to somebody. Generally, that means it goes above the strike price. So cool, that means you're making the max profit. But let me get into what that means. What you're looking at here is an options chain. This is on the calls of Amazon, and Amazon stock is trading for 222.76, okay? Now, on the calls are expiring in 32 days. They go about a month out, okay? So this is a monthly option position that I'm showing you. I normally do weeklies, but some people like to do monthly, so I'm showing those people this monthly option. Now, here's what you're going to be looking at. 3 real columns. First of all, the option is trading between 11.75 and 12.30. When you sell it, you're going to get somewhere close to this 11.75, and we're going to use that number as our rough estimate of where it is. But we're going for the juice. If you strip everything else out, we're going for this extrinsic value column, which says it's $8.62 in juice, which is income. That's the number we're going for. If you want to buy Amazon and hope that it goes up, awesome. But we're not in this game for that, right? We like to have the probability that it's going up because covered calls are a bullish strategy, but we by and large just don't want it to go down. And in order to make sure that we get this 862, that's also helping cushion our portfolio. This whole 1175 is money that we get. I'll show you what that means in just a second here, okay? So we are going to buy the stock at 222.76, and we're going to turn around and sell the slightly in the money calls. I like to sell in the money calls when I'm beginning a position because, I like to have a cushion, and I'm going to show you what that cushion looks like right now. So what if Amazon stays the same? Well, I got to do some numbers for you, so this all makes a lot of sense, especially if you're a numbers person. We're going to buy the stock at 222.76. We're going to turn around, sell the 32-day calls, it's about a month out, for 11.75, like I just showed you. We're going to have a basis in the stock of 211.01. It's 222 minus 11.75 at 222.01, roughly, right? And so the profit calculation goes like this. We're going to make, if it stays the same, anywhere above 220, we only can make 220. We've sold somebody else the right to take our stock away from us at 220. Well, that's cool. That's the max profit area. I like that. So we let the whole position get unwound and closed out at the end of the month, and we make $220 minus our basis, right? So we pocketed $8.90 on that whole position. Now, Our return on investment is $8.90 divided by 222.76. I guess I got a penny off there, but it's 4%. I like to do different math. I call it Yegi math, but it's 862, and I divide it by the basis because that's the amount of money I take out of my wallet. A lot of people don't like that math, but I like that math. It's 4.1%. It's not a big deal one way or the other. But if you can do this every month, do the same trade in the money, whatever, on this stock, you end up making about 48%. Now, I don't know about you, but most people don't make 48% return. And the more you go in the money, the lower your return will be, but the higher chances that you will have of getting it. So this one just says, hey, Amazon stays the same. What if Amazon goes up? Well, if it goes up $20 to $242, it's the same math, everybody. You don't get more than $220. You get $220. That's it. I don't care if it went to 242. We're not in this for the capital appreciation. Unfortunately, in this case, we're in this for the juice. And our juice is about 862. Turns out to be about 890 because it split the bid and the ask. But our return on investment is the same exact thing that was before, because anywhere above 220, we don't get that money. We just get the max profit. Now, what if it drops? This is the fun part. Or maybe it's not fun, but it's, I don't know, it's interesting. You buy the stock, all the stuff is the same. But now the stock goes down to 202.76. It's got a 10% decline going on, which Amazon doesn't do very often, but it could do it. Let's just say it does. Well, you're protected all the way down to 211. That's our basis. But you go down to 202, so you end up losing $8.34. That's about 4% versus the 10% you would have lost if you just held Amazon, and waited for it to come back. You'd be down 10%. Bottom line is you can then do it again for another 862 and now bring your basis down to 202.39. In other words, you've gone from 211.01 and you've sold for the next month another 862, for example, in juice, and now you're in it for 202.39. So by being in Amazon for 2 months, you've basically broken even on a stock that has gone down 10%. I think that's compelling. Now, that's all if the stock gets assigned, somebody exercises it against you, and then you have to exercise your base position. You close out the whole position, you get a bunch of cash. You've made your max profit if the stock stays the same or goes higher. Now, I like to roll my positions. Why is that? Well, I don't like to have to make, you saw how much decision making there was in getting to this point. The fundamentals, the news, the right stock, the right spot on the chart. But it's a lot of stars have to align. I want my stock to move slightly higher. So instead of closing the position, I roll the position. What does that mean? Well, I buy the position back, the short position back, for a minimal amount of juice. It starts at 862, but as it approaches expiration, it becomes less and less and less until right a second before expiration, it's zero. So I buy it for a few pennies back, and I have to also pay any amount that it is over the strike price. That's called the in the money. That's the intrinsic value. We talked about the extrinsic value too. The intrinsic value is the price I have to pay to get back in. Well, no matter what it is, right? If it's $20 over the strike price, well, I lose that $20. That, in other words, that comes out of my account in the form of working capital. But at the same time, I gain that $20, right? On the base position, because my base position, my stock went up too. So those two things offset, and I'm left with the 862 in juice. That's why I like to just keep rolling, okay? You do have to come and use working capital, but every business has working capital. I don't mind that, because if the stock just keeps going up, yes, I use working capital and my basis actually goes up, which lowers my ROI a little bit, but I'm winning. I'm getting the maximum amount every time. And anytime you can just let it go. So if you're like freaked out about having to come out of pocket or out of your working capital to roll up, just let it go. Close out the position, you make your max profit. So my goal is to have my position, because I don't want to keep doing the decision fatigue thing and have to make the decision. And is it the right spot? Is the market right? When it's right, I want to just freaking push on the accelerator, okay? So that's why I like to roll my position. So if any of this resonates for you and you want to learn a little bit more, I am having an event in September, And it's going to be in Clearwater Beach, Florida. If you just hang for another couple minutes, I'm going to give a little promo about that, show you about how to get more information, maybe a discount or two. And I'd love to see you down in Clearwater Beach, Florida in September. It's going to be awesome. People are just lining up right now, and we're selling out a bunch of seats and rooms, so you got to hurry. And I'd love to see you there. If you can't make it, that's cool. I've got a bunch of other things for you if you want to go further. Otherwise, you could just keep watching videos here, and I try to teach a little bit every week about my strategy so that you can learn. Not everybody has to buy my course, but if you're interested, I've got a course called the Cash Flow Machine Elite. It's my premier course. Shows you how to do in-depth covered calls. We go about an inch wide and a mile deep. So I haven't seen anybody go as deep on covered calls as I do. It's called the Elite course. You can go purchase it right now on our website, cashflowmachine.io, if you want to do that. We have masterminds where we can get involved. We get a bunch of people getting together. We got a community of people that like to buy and sell different things together, and we talk about strategies, and we have a lot of debates going on these days. So if you're interested in doing that, there's no better way to learn something than through a mastermind group. It's the immersion way of learning things. Thanks for joining me. I hope that helped, and stay tuned for the promo of the event in September. See you soon. Bye. What if you could lock in reliable income every month, no matter what the market's doing? Most investors are gambling with their retirement, hoping things work out. But hope is not a strategy, and that's why I created the Cash Flow Machine, a proven system that works in bull markets, bear markets, and everything in between. Join me live in Clearwater, Florida, September 26th through the 28th for a powerful 3-day event that will change the way you trade forever. It's called the Wealth Accelerator Live. It's 3 days to build your income machine and rewire your wealth mindset. Here's what I'm going to deliver to you. Lifetime access to my full elite trading course. It's a $2,997 value. A personal trading plan that you can use right away. Mastery of the Juice Calculator to engineer smarter trades. Hands-on sessions with real traders showing real income strategies. Behind-the-scenes tools we never teach online. Now, you'll be in a room with serious investors, people just like you who are scaling income and wealth with this repeatable system. And we're keeping it small and intimate. Spots are very limited, and we will sell out. Grab your early bird ticket today, and let's build your income machine together. Hey, it's Mark Yagi, and if you haven't subscribed to this channel, please do that right now. That would be a great favor to me, and plus it helps me get this material out to a lot of other people that might need it. I've got a little bit of a movement going on here, and I want to try to change the world one person at a time, showing them that you can make safe, reliable income from the stock market. And plus it helps to grow the channel a little bit. Also, if you would give me a thumbs up on the video and like it, great. If you don't like it, give me a thumbs down, that's cool. But just tell me why you don't like it so I can get better. And then hit the notification bell so you can get these videos as soon as they come out, because a lot of times this is timely information and you want to get that information before it gets stale. The last thing is to join my free Insider Tips newsletter. There's a link below, and you get everything in one spot. You get breaking news and analysis also. So that would be great if you could do that too. See you soon.